I was talking to Marty yesterday, and obviously we're very excited about the partnership with Ethos, the things we're able to do with you guys, and all the support you're providing, for our agents. And the coolest thing, he was in San Antonio Juan and I were in San Antonio on Monday. Marty was there, and my favorite thing about what he said was that the insurance industry as a whole has been pretty flat since Jimmy Carter was president, and he was joking. He's like, "It's well before you were born." And it's stayed about the same, right? But carriers expect to grow 12% per year, and Ethos expects to grow, hundreds of percents per year, just kind of like Family First Life. So it's a very similar mission. But he was like, our goal is not to, steal production from any other carrier partners you guys have, to take what they're doing. It's just to add on and to be a value add for your agents where they get something that they don't already have access to. So I thought that was cool. I think we share a lot of the same mission statement and have a lot of the same goals when growing our companies. So I love being in business with y'all. Any updates you have for a couple minutes would be great. And then we'll get Juan on and go over what he's doing to write so much damn business.
No, that sounds great. And Zach, I really appreciate the time today. And I was hoping maybe it was your technical difficulties that had me looking this pale, but it's just December. So it's nothing we can fix, maybe with some of the knobs and dials. But no, I agree 100% with what Marty said. The nice part with what we do is we don't want to go head to head necessarily with the great carrier relationships that you have and you've had for a long time. There's probably going to be a little bit where we rub paint with them, but we're not here to try and cannibalize sales. No one wins if you're just introducing a product that is a me too, product that it looks, feels, smells just like carrier XYZ. Then why the heck am I going to take the time to learn your product and your process that's a little bit different? But where we've seen, Zach, and jump in if you have different feedback as well specific to your team, where we've seen the most impact is where this complements your other products and process, and that is with a client completed application. It is a great way for you to continue to deploy this to non-responsive leads. I am certain the numbers don't lie that if you buy a box of leads, X% are going to respond, but you still have so many of that percent that did not respond over the last 4 or 5, 6 months. Maybe their hair was on fire. Maybe they just don't answer the phone like me, or however you engage them. But this is an opportunity to still try and convert those sales. For your newer agents, folks that I heard someone put it this way: for your newer and or lack of confidence agents that have been to more training sessions than client appointments, this is a great process for them to engage friends and family, where it's an efficient, frictionless process to try and get that ball rolling for them and create some commissions when they're just trying to get their feet wet in the process. That's where we really see the rubber hit the road, but also social media push, targeted email. When you have a client completed application, my biggest thing that I try and push is change the dynamic of those client engagements. You don't have to be a field underwriter anymore or be concerned about an overpromise and underdeliver on the quote versus the end approved premium. You know exactly what you qualify for in 10 minutes time. Eliminate that pain point, get them to complete the application, and now you can have a far more meaningful conversation around what they were approved at. Everybody on this line knows far better than I do that it is tough to quote a preferred and have to place a standard. There's some shucking and jiving involved there. Juan probably knows all about that. If you've done 1.1 million year to date, you're the man. You know how to address that. But that's not an easy conversation. It's one thing if it's over a 30-day period, but in a 10-minute period, very difficult. So bypass that quote. Engage the folks in that manner, and I think you're going to see that this is a great complement, to your current process. And if you still do a lot of face-to-face at the kitchen table, touching knees with clients, use this in a digital and virtual manner to almost clone yourself. You have Ethos working for you, on the side with leads and emails and everything else that you have while you're doing the hand-to-hand combat out there on those bigger and more important cases. This is term, it's up to 2 million. We are not doing premium finance, G1, G2 split dollar. This is just basic coverage. So put us to work for you while you're doing your work at the kitchen table that is crucial, to getting more families covered. And that's what Ethos's goal is to, ensure more families. And if that's not enough to get you, fired up, we want to incentivize people here in December. We're running 2 incentives. And if Zach, if we don't have the flyer in your hands, we can send that right after this, just to help promote. The first incentive is, if you have not yet stuck your toes in the water with Ethos, what are you waiting on? I guess you're waiting on this, a check. So for agents that have not yet written an Ethos policy, if you place 2 policies in December, we want to make sure those policies stay in force for a couple months. So 3 months. This is payable in April, but it's a $300 bonus if you place 2 policies, with Ethos. Quick math: our average premium is about $1,000. If you place 2 policies, $2,000. That's a 15% bonus. Check my math, Juan. You're probably pretty good at that, but it's a $300 on 1,000. Is about a 15% kicker that we will pay in April. And, great segue, because those are some tremendous discounts on leads for everyone to take advantage of and fill your lead box. We want to help you out with that as well. So for everybody, for every $1,500 in annualized premium you place between now and end of the year, we're going to give you a $150 credit towards leads that we're working with Family First on providing. So depending on the quality of the lead, that's going to be between $5 and $15. So worst case, best case, you buy those higher quality leads. That's 10 leads for every $1,500 of annualized premium you place. So again, our average premium is 1,000. You place 3 policies, you're going to get a $300 credit, for 20 leads, or some variation if you go for lower quality lead. But those are the 2 things we're running. That's what we wanted to hop on here and discuss today, Zach. And I think I'm just over that first 10 minutes here in time. Hope that was helpful and impactful. And we really committed to Family First, and we want to drive deeper with you guys. So we hope this motivates folks, get you off the bench, get you in the game. What other cliche things can I say, to motivate you, get you rocking and rolling. But those incentives hopefully will help give you that push you need to try and stick your toes in the water with Ethos. So we appreciate it and look forward to that activity.
Before you go, so everyone that's on here that's contracted with our carriers is contracted with Ethos now. They go to the portal. Do you have the portal? Is just portal.ethostheagent.com or something like that, right?
Oh, yes. I'm sorry, Zach. It's agents.ethoslife.com. Okay. So if you go there, and this is critical piece, Zach. If you go there, you click login, it's going to ask you to activate your portal if you have not already. If it does not recognize your cell phone number or your email address, that you would get the activation code like a lot of websites you go to. Stop there. We found you get the folks that are super eager. They double click, triple click, go deep into the matrix. And next thing they know, they've actually signed up directly with Ethos. We can fix that. It just creates some delays. So if it doesn't recognize you, reach out to us, to Corinne, to folks on the inside. We'll make sure that you get a portal set up so you can get, take advantage of these incentives.
Perfect. And then just to comment on your lead thing, I don't know if I'm supposed to tell everyone or not, but I don't work for Ethos, so I'm going to anyway. The leads are, hopefully I saw your face, you're like, oh, but the leads are ones where you guys market direct to consumer. And then basically what happens is they never close. And then you're going to get us the leads so we can buy the leads from you all. It's going to be in there soon, like probably within the next couple of weeks. And then we can write whatever business we want off those leads. So it's people who are actively looking for insurance. They started an application, they just didn't finish it. So when you guys see those start popping in the CRM, we'll tell you what they're going to be called, but make sure you look out for those. I think it's going to be a great lead source, and I would think it'd be pretty easy to close. And we've had good feedback from people that have piloted them. So, Jason, I appreciate you getting on, man. Thanks for all your guys' support, and we're looking forward to keeping working with you and growing with you guys.
Likewise. Thank you all. Make it a great day.
Thanks. All right, Juan. I think everything we're doing with Ethos is going to be big. It's going to be cool for us to move forward and just keep adding on partnerships like this. But like he said, it's really like a addition to what we're doing. We're not replacing anything, and it's a cool way to work all your old leads. And where I want to start with you is, this year you're at 1.1. You finished the year probably at 1.2, 1.3, somewhere in that range, I would guess, because you write a couple $100,000 every month. And last year you hit Hall of Fame. And if you could, dude, kind of go through what it was like for you getting started here, because everyone wants to skip to where you're at, I think, right? People do a building too. They're like, I want to skip to where you're already good at recruiting. So what I'd love for you to cover in the beginning is, as a new agent, what you did to develop the skill set, kind of what you do for lead flow, what you did to become a really good closer and someone who's good on the phone. Because then once you develop that, then you kind of branched off and started doing the things you're doing now. But we were talking at the conference in San Antonio, and I'm like, could you close these when you were new? You're like, no, it took so many reps to get good at this to where I can write someone a $70,000 AP IUL now. and I feel comfortable doing it. But I'd love for you to kind of backtrack for us and give us like, what you did to develop the skill set. And then we'll talk about how you've used your skills you developed to, start marketing yourself, writing these higher leverage cases, and, making kind of an astronomical amount of money doing so. So I appreciate you getting on, dude. I'll let you rip for a minute.
Yeah. So you hear me okay? Huh?
Yes, sir. I got you.
Okay, great. So the basics. I basically, when I came into FFL, I was not, I'm pretty new to life insurance. I never sold that. I have been in sales before, but it was kind of like I follow the system. I was told basically by leads, call so many people. I called my first day, I called 500 people, 500 dials basically, and I only made 3 appointments. Only one guy was at home, no sale. The next day I did the same, 6 appointments, closed my first one, listening to a lot of videos, a lot of things that I was doing. Long story short, I basically just follow the system and learn how to present. Zach, you were one of my guys that basically helped me. Easton helped me a ton through videos. Basically, I was just following what you guys were doing, and it was just like a repetition and getting better each day. And I always have the saying, day by day, in every way, we're getting better and better. And if I repeat that in my mind every day, I know I'm gonna get better and better. And so if you guys get into that habit of repeating every day by day, in every way, I'm getting better and better. That's what you need to strive to do every day. Not be the best, but strive to be the best that you can be. And then so that's pretty much. I mean, I started just going through repetitions, did a little more each month till get up to about 30,000. I think that once you get to about 30,000, that's the point that you can actually start making a little bit of your own decisions as to what other things. And I started moving to mortgage protection. So I was all final expense. And then I did better with those little by little. One of the things that I heard from you, 30 appointments a week will make a big difference instead of 20 appointments a week. I implemented that. I went to 40,000 a week because of implementing what you guys taught me. And after that, it was just like the first year I hit Hall of Fame, which it was all final expense, mortgage protection, no IULs at all. I was doing a little bit of IULE, which it was mortgage protection. And a lot of people know how to do those. And
yeah,
that's
and you're, well, I was gonna say, and I've had agents that have been like, I called Juan and they're selling a little bit, and they're like, I called Juan and wanted to learn how to do the big IULs, and he told me, nope, you need to go sell 30,000 a month first, and then once you get to 30,000 a month, you're writing 30 apps a month because you have good cash flow, you can maintain your business, then we can start teaching you how to do IULs and all this other stuff, right? And I think that's important because, like we were talking before this call, if you're a new agent and you try to write just big cases, you have no cash flow coming in. You can't stay in business. You can't buy leads, right? So you were like, I have really steady cash flow coming in. Now let me learn this other side, right? And I like that because you just redirect people. You're like, nope, go back to do the basics. Once you hit this benchmark, then we'll talk about it. And that's kind of how we've always operated in general, right? Hey, once you make your 15 appointments, then we'll go through it in home. And I love the way you're approaching it. So, say agents on here are like, okay, I get it. I'm going to start selling enough to maintain my bills, be really good. And most importantly, get good enough to where if I'm presented with someone who has a lot of money and they are willing to spend, $5,000, $7,000, $10,000 a month, some crazy numbers like you put up, if you're not good at selling, you're never going to close it, right? So you did that part first. So then fast forward for everyone now, what you're doing to, write the IULs you're writing, how you're leveraging social media, and kind of what you do in the presentation for those people who have kind of elevated to where they, they're like, okay, I could take some time and start really putting effort into learning this side, to double, triple, quadruple, 10x my income. Right.
And just before I got into that, but I have 2 guys, Dan Hatcher and Syed Amjadi, which is, we call him Mo Amjadi or Mike Amjadi. They're both hit Hall of Fame this year too. they were both hit over 30,000 on final expense and mortgage protection. So they learned the in-home real well. That's what they're my top guys. And like basic, those are the keys. So you can prove. I have a lot of other guys selling IULs, but they have not learned the in-home, the basics of that. And then so I feel like anybody that has that is easy to move into the IUL side. And how I moved into it was basically also little by little. I had some guys that were experts on IUL that came into our agency, like Alejandro. He was already an IUL guy. He's been doing it for 2.5 years. And then so that helped me a lot, asking him questions. Hey, how do you set this up? Is a bigger case, things like that. But it's not as difficult. But I would say if you have the in-home down, it would be pretty simple way. I know many of that's one of the things that I admire on FFL Capital. There's a lot of great people doing extremely well in the in-home, you know.
Yeah, absolutely. So what did you do to start getting clients with IULs? So I guess first, let's talk about how you found the clients. And then I know you started doing referrals and stuff like that as well, and thoroughly working through. And, you know, if you get a sale, you're not just getting one sale from that and not just helping one family, you're leveraging that into, you know, 10, 20, 30 other opportunities from that one person, right? So let's start there with what you're doing to find the people. And then let's talk about what you do to just like a basic presentation that if other people run into people who have enough money to do IULs that they can run through.
Okay. So social media. If you're not in social media, I'm 59 and I'm in social media. I don't even know what TikTok was or anything like that before that. And then so I just got into it. I started posting the heck out of social media, and I started getting people little by little following me, and then so just getting some people that if they hear you, whether you're recruiting or doing final expense or mortgage protection, whatever you're doing, if you're talking about it, I think people will follow you. They will basically, because you know more than 99% of the people out there about what you're talking about. And then that's how I got my first leads. I started basically getting leads on through my social media. My first cases were more like $6,000, until I learned how to do the 10,000, until I learned how to do 15, 60. Now I'm talking about with people how to do bigger and bigger. There's people that do much bigger than I do. So anyway, the other part is a simple way. Is if you're, let's see that there's in the AMS team. If you're not part of the AMS, you should be. Is a FFLAMS.com or is it FFLAMS.com. You should be part of that. Register a team for annuities, IULs, many other carriers. And if somebody is trying to get a retirement plan, so let's see that you go into a home and you're basically talking to them about mortgage protection, and then they say, hey, what are the golden question? Do you have anything else that acts as a life insurance? And they say, no, I don't. Well, typically we stop right there. We go to a mortgage protection. Now you can actually say, if they don't have anything, would you like to have something that will work like that towards your retirement? And if they say yes, I'll say, I'll talk to you after we get to the presentation. I'll come back. So you can sell the mortgage protection, which is there, and then come back and do a big IUL for them. What that does,
set it up as a second appointment at that point, like you reschedule a second appointment with them.
You can, and if he's somebody that says, I just want to put like $200, you can even do a $200 right there. If you have the extra 30 minutes to do an application with them, that would be a real simple one. But you can actually set up a whole family on retirement and kids IULs. Right after that, you can go in and set up another appointment with those people. And a lot of people are looking for good retirement, and you can show them how to get a better retirement tax-free. It grows tax-free. So it's kind of like that's pretty cool.
So you go to the second appointment with them. What does the presentation look like for you when you So say someone's like, yeah, I want to put a couple thousand, like $1,000 or $2,000 a month away from my retirement. I haven't been doing it. I need to do it. And you already wrote them the mortgage protection. You're sitting at the second appointment now. Like, what does your presentation look like to them? To get them to buy the IUL from you?
Yeah. So the first thing I do is I show them a little clip about the importance of leveraging life insurance for tax purposes. So I show them how they can do that. And so I play a little video that's 4 minutes. If on my website, solidfinancialplan.com, you can do that. It's Ed Slott. He's all over YouTube. If you look at Ed Slott, he's basically a CPA tax advisor. He doesn't say, I don't sell life insurance, but this is the reason. So I will show them that video just to get them sold on the whole idea. Then I will basically do an illustration for them. You have to illustrate, hey, if you put $2,000, how old are you? Da, 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 da. You ask them some of the health. If they're pretty considerably healthy, just like for an IUL E, that's about the same. You will basically put them into that. They can also use another body if they want to grow their money. So what that means, if you have somebody else that is 60 and they do not qualify, but they want to grow money, you can put in their sons that is 30-year-old, you can put an IUL on that. They can grow their money and they can be the owner. I did that 2 days ago. 2 kids. The guy is 61-year-old. He's putting $200 per kid. He's going to grow their money on the kid's body. Okay. So that's something that you can set up, demonstrate, illustrate, basically how will that look 10 years from now, 15 years from now. At the 15th year, what you do is you show them every time you show at the 15th year. Now you do minimum death benefit, maximum cash value. Why? That's going to grow their money. Don't try to do where you can make more money on them. If you try to do that, you screw them over, your career is over in very short time. You do the right thing, your career is good for the rest of your life. Okay. Now, that's the first thing. The second thing is you look at the 15th year, you go down the line, you show them, hey, if you leave this money in the bank, will you have this much interest built in? And then they're going to say, no way. They say, plus you have all this life insurance attached to it that is covered. At 20 years, they're going to have a bunch more than what they put in. 25 years, more. So if somebody is 30 years old, easy sell. If somebody is 50 years old, easy sell too. You can show them 15 years better than the bank.
Right.
They don't have to put any more money after that, and it continues to grow.
And then can you talk to everyone about what happens when they take out income? Like I have an IUL on myself that I pay
Sure.
like $3,500 a month on. And when I turned 40, I started when I was 22. When I turned 40, I think I can take out like $300,000 per year or $400,000 per year tax-free, somewhere in that range. I don't remember exactly. I took it out 5 years ago, but which is crazy. So can you explain to everyone why you can do that and how that works? But I can take that money out tax-free and it won't count against my income taxes because I'm taking out as a loan, right? So break that down for everyone, because that's the crazy part about this, right?
Yeah, that's amazing. Somebody young like Zach, he got it at 24 years young, so he got it early on and it's paying $3,500, which is a lot for a young person. For an older person, I put $2,500 every month. It's not that much. And then so depending on the age, how much life insurance is going to be paid for. Okay. So if the money starts growing at about 5% interest, that's what it's going to show on the illustration. But in reality, it's growing at about 7 to 10% interest. So it's kind of like that's the average that they're going to be getting throughout. What that means is they're multiplying their money every about 8 to 10 years. 8 to 10 years, they're multiplying their money. So if you can count, if they're putting basically $10,000, that's 20, then 40, and then the more times you can do it. But if they're putting like 100,000, that's 200, then 400 and 800, and then they can take the loans out tax-free. is against their assets. So remember, if we lend money against our assets, it's tax-free. We can basically don't have to pay taxes for that because we're getting the loan just like an home equity line of credit. We can do the same thing. And then so because you're doing that, you're not having to pay. Plus, the other cool thing is when people take the money out of that cash value account, the money doesn't leave the cash value. The money continues to be in there. So if they have 100,000, the 100,000 is still there, accumulating 7 to 10% interest. They borrow the money from the life insurance company at 4% interest. So they're leveraging that money from the company's money. They're still making the difference on some money that they have somewhere else. So they can do a deal, they can invest it, and that's what a lot of people use it for investment purposes. And then
Right,
they can,
because you're 6% net at that point, right? On average, or somewhere between, you're still netting 6% positive when you take the 10% interest and the 4% interest, or whatever it ends up being, depending on, how
Right.
that year is, right? But
exactly. And then so you're now making interest, uninterrupted account, using the money somewhere else. You don't have to pay the loan back immediately. You can pay it back or don't pay it back. When you die, the death benefit will pay off your loan, and then the difference will be given to your family. So it's kind of like an easy way to show people, and they're like, oh, I never been taught that. I never seen something like that. It's never been taught to them. You're an educator, not a salesperson at that point.
absolutely. And for everyone that's doing well on this call too, y'all should probably have an IUL. It's a really good way as independent contractor to help keep your income tax low down the line. And, if you're a 1099 person, you may not get as much Social Security later on. So it's a good asset for you to have, right? Juan, if people want to start, you spend a lot of time learning this stuff and getting really good at it. What resources would you give people other than the AMS website to start learning how this works and being able to talk about it in an intelligent way with their clients, or even if they have other friends that have money, so they can have a conversation and be able to explain all this? Do you have certain trainings you listen to, or do you have certain trainings you've done that you would encourage everyone to watch to become an expert at this?
Yeah, I would say if you could look at max funded IUL, kind of like those in YouTube. If you can say how to set up an IUL, minimum death benefit, maximum cash value, you can learn it. I want to repeat what Zach just say. You guys, the majority of you guys here are under 40 years old. And if you don't have an IUL, I highly recommend, because you're going to regret one day that you did not get it at that time. I regret it because I did not have it before 50. And then so this is going to grow for you. It's going to be your money. This is going to be your bank. You can use this for yourself, and it will help you sell to other people, because now you can say, I have an IUL and this is the way it works. It helps you a
Awesome,
ton.
man.
Yeah.
Well, hey, Juan, we appreciate your time, appreciate your wisdom and everything you do to help our company grow, and glad to be in business with you, man. Thank you guys for jumping on. If you have any other questions, Juan has a ton of training out there. Look it up, and appreciate you, brother. Thanks for helping us out today.